Hi. Okay, so Sonata Software. Here we have Sonata Software, a pretty big company, 9,000 crore market cap, so nothing to scoff at. A stock PE of 22. The price of one share is like 343. Return on capital employed, very nice, almost 30%, which is very high number. Return on equity is 27%. Here we can see dividend yield 1.2%, 1.28%, and book value 60 rupees. So it seems to be on the return equity and return capital employed, a very profitable and efficient company on these standards because 27, 29% ROE and ROCE are like on the average pretty good numbers. So this is the price chart. So uh, let me make myself smaller first. Nobody needs to see my face. Okay. In September 2014, we see 678 rupees. Just a year back, December, 675 rupees. 5 years ago, if we just look at 5 years ago, right? Here we have October 21st, 300 rupees, 350 rupees, this range. Then this happened. And this happened. Okay, big price jump, big price jump, here we can see. And then came the decline. The last year has been a bit of a decline for the company. Uh, Again, 822 was the peak, around 800 rupees they reach in February of 24, and now they have just experienced a big decline, currently at like 342, 343 rupees. So big decline. You can take a look at the PE ratio. Of course, everyone's favorite PE ratio. Okay, currently 22, but overall did reach 30. 47 is big. 47 is pretty big. Okay, and before that there was a time, smaller ones, but okay, so recently had a price decline. This is a, as the name suggests, it's a software company. Yeah, it's a software company, and it's a high growing company. It's a fast grower in terms of revenue. This is one like fast growing company. Here we have the profit and the loss section. All this is from screener.com, by the way, screener.com, a very wonderful website. So in 2014, we have revenue of 1,500 crores. 2018, 2,400 crores. Uh, in 2020, 3,700 crores. 2022, 5,553 crores. 2024, 8,613 crores. All these numbers are in crores. And finally, 2025, 10,157 crore rupees. So you can obviously see amazing growth. And here we can see these are the compounded numbers for sales and profit. So first, let's focus on sales. 20% annualized growth numbers for like revenue is amazing. 22% for last 5 years, and for the last 12 months, 16%, which is still very nice. But one thing that is a bit problematic for this company is this: the compounded profit growth. Now, 12% for last 10 years, very nice. Again, 9%, not bad at all. But when you compare it to revenue growth, you can see there's a lag. Profit growth does not match up well with revenue growth, basically. Here you can see the big gap. Last 3 years, 22% revenue growth, only 4% profit growth. Here you can see return on equity. This has experienced a slight decline, not major, but a very small decline. 33% 10 years ago, and 31% return on equity observed in the last 3 years, falling to 27%. So, okay, we can take a deeper look into the profits of this company. So, first, you have operating profit. Again, everything is in crores. And below it, of course, the OPM, the operating profit margin. 2014, 100 crores. In 2019, 336 crores. The operating margin increased to 11%. Then 373 crores, 380 crores. 2022, 464 crores, but operating margin currently on 8%. So slipped from 11 to 8, but still in that nice range, 8 to 11%. So not the highest like profit margin company. We can see here, it's not like 20% of like HCL Tech. It's like 8, 9%. Then we can see 604 crores, 728 crores in operating profit and margins are again 8%. But took a bit of a hit, 690 crores and 7% operating margin. Operating margin took a bit of a hit. And overall, we can see though, these black figures, the operating profit, it has risen considerably. Like visibly, we can see it's becoming larger and larger. Not the worst growth at the operating margin side. Here you can see this number like 425. This line is net profit. This has also risen. This has also risen quite a lot. Of course, we can see that last 3 years has been very low overall. It's the last 3 years where the profitability has been pretty low. But before that, 5 years, 9%. So this could be a temporary dip. Who knows? 728 crores, it can come back. I don't know. I don't know much about the company, but it can very much come back. Here we can see the sales in like better, like more visuals. Yes. Here we have the sales. The blue shows the sales. The quarterly sales is shown by the blue. The green, you see, the green thing, those are the net profit margins. Yellow is operating margins. So here we have quarterly sales, latest 2,965 crores in sales, but net profit margin of like 3%, 3.6%. Operating margin fell to 5.38. And overall, though it's not that big, we can see that the operating margins are kind of slipping. Like generally speaking, they are slipping a bit. Like here, 2018, 10% profit margins. Here, 9%, again, 6%, and it's now fallen to 3.6% net profit margin. Operating 5.3 here, 12% 2019, 12% again 2021, 10% 2023, taking a bit of a slip. But the growth is a good one. It's very high growing first firm, fast growing firm, and it prides itself in being so. So this number you see, 17.93%, this is the sales growth. So even let's say a more tough environment for IT that has been observed in the past few years, 17.93% sales growth in 2015 is very nice, along with 15% in 2024, 34% in 2023, 2022, 31%. Overall, the last 10 years, it has done very well in sales growth and revenue growth. Well, they do the same thing. Sales growth, what am I saying? Sales growth and revenue growth, same things, has done very well in profits for a longer period of time, like 5 years. 9% is not the worst growth in profits, like annualized, but I guess it's just the last 3 years, bit of a dip, but maybe it's just recovering from, yeah, it's just basically recovering from 2024. It could be that. It could be that. So, yeah, this is not it. This is not it. We are going to look more into this company. So, here we have the investor presentations. It's the latest investor presentations for this company. Quarter 1 fiscal 2026. Here certain we are a modernization engineering company. If you're wondering what Sonata actually does, uh, so Sonata does two things. Mainly is reselling of software. So you have Microsoft and other companies, they have developed their own software. So Sonata acquires a license from these companies and sells these products like Microsoft products, AWS products, Salesforce products to Indian companies. Not Indian companies, any other company, any other enterprise who may need such software products. And if you're asking why Microsoft doesn't directly sell, because I guess Microsoft's focus should be more on developing products. Well, Sonata, gets a license, pays money to Microsoft to get that license to sell these products. And they are responsible for distributing and selling these products, reselling these products. So that's their big revenue business, reselling of Microsoft software, you can say. And the second is, of course, IT services, data analytics services, modernization services, cloud services to other companies to help them, let's say, adopt IT infrastructure, let's say, get them transferred to the cloud, help them in data analytics, and like essentially modernizing the company, modernizing the company, data transformation of company. Basically, yeah, it's his modernization engineering firm. Uh, Here you can see it transforms enterprises from 80-20 run change to 80-20 change run. I find that pretty funny. Okay. So 15.4, okay, what? Yeah. Sonata at a glance, 39 years. IT solutions provider. Here are some of the services provides like clouds, AI data managed services, digital contact centers, automation, helping businesses automate some of the repetitive tasks, and dynamics. I don't know what dynamics means. 15.4%, 10-year CAGR in revenue growth, $1.2 billion revenue per year, 15 different nations, nationalities, it says. And it's a platformation framework. Now, platformation, I'm not sure what it means, but from what I understand, is selling all these services on a platform, if that makes sense. Like, instead of just selling random services, Sonata is selling a platform, like a one-stop platform where businesses can come and modernize basically, from what I understand, but I can be wrong. So uh, platformation framework. Now, industries, which industries do they serve? So TMT, technology, media, and telecom. RMD is retail, manufacturing, travel, and distribution sectors. BFSI, of course, banking, financial services, and insurance. And HLS is healthcare and financial services. Again, these are the people whose software they are reselling. We have SAP here, we have Salesforce, we have AWS, Microsoft, ServiceNow. So all this software, they will resell them to companies and they can provide their own services on top of that. Basically, like to a company, they sell a Microsoft software, resell it to a company. They resell a Microsoft software to a company and they can then sell their services to that same company on how to use these Microsoft services even better. So your Microsoft Salesforce, again, of course, they're dipping into AI or Lisa chatbots, their own innovations. Every company is going into AI. But now this is what they pride themselves in. And of course, they're top quartile growth firm. A top quartile growth firm. They're evolving from Sonata Software, Sonata AI. Then, okay, this is important. Now, these are some recent events that happened and some of the future, what they're looking into. Uh, so large deals and accounts. Here you can see between fiscal 22 and to date, they have closed net new 23 deals with total contract value, TCV, of $456 million. And there are some of the few top deals they've won in the past few quarters. A $73 million deal for a technology media telecom company. They currently have 30 large deals in pipeline, and on average, every deal takes about 4 to 6 quarters of pursuit. Here are some of the big deals they've won in the latest quarter. Latest quarter. One is with a technology corporation, one is with a multinational financial corporation, and one is with the financial mortgage corporation, all three in the US. Okay, all three in the US. Moving on, we have this. Now, a big bets on cloud and data have scaled. Now, this is revenue by, you can say, service. In the bottom, you can see cloud and data in the dark blue. Light blue, we have dynamics. And even the lighter blue, we have others. So we can say that they have divided all the services they provide into different segments. And cloud and data is one of their segments. So the cloud and data segments or cloud and data services have now become 59% of revenue. 59% of revenue comes from cloud and data, Dynamics contributing 23%, and others are 17. And this is a big jump from like 2023, where 50% came from cloud and data, but now 59% of revenue is coming from like cloud and data. And Dynamics contributes a smaller percentage now from 28%, like 2 years back to 23%. So maybe this can be a look of confidence because if they made big bets on cloud and data, then they succeeded in that, in scaling up this. So this can be a plus for the management as they focus on cloud and data and they delivered. Moving on, we have revenue by vertical, which is basically industry, and revenue by geography. First, we can see vertical revenue split. So fiscal year 2025 and 2022. So transition we can see. So RMD was retail, manufacturing, and what was D? I forgot. What was D? Hold up. What was D again? Uh, D was. Can I find D? I don't think I can find D. Hold up. What was D? Yes, distribution. Yes, D was distribution. So lesser amount of revenue is coming from the retail, manufacturing, and distribution. Higher percentage of revenue is coming from the HLS and BFSI from 9% in 2022 to 2025, 34% of revenue, now becoming the largest segment. BFSI, we all know banking, financial services, and insurance, while HLS is healthcare and life science. Now, geography split. Now, this revenue split, from what I understand, is only for their exports, only for revenue coming from nations outside of India. So this is international revenue split, excluding India. So 74% of revenue from outside comes from USA, 14% comes from European Union, and 12% comes from rest of the world. All right. This is not India, not including India. From what I understand, and I can be wrong, India is the biggest country for them in terms of revenue. Majority of revenue comes from domestic based, comes from India. And I think I can show that. This information is available here also. Here. Yes. Yes, yes, yes. So we can see two things here. First, we can see how much money comes from India or the domestic base. They call India the domestic business. And we can see the latest numbers too. So win-win. So in quarter one fiscal year 2026, okay, these are quarter on quarter numbers. All right, quarter on quarter numbers. Year on year, I believe, should be the better ones. But okay. Okay, so the top line, let's focus on top line. Revenue in millions, dollar millions, $346 million in revenue of this international services, which is, of course, the international business, $81 million in revenue. Then domestic business, $265 million in revenue. So, see, I was kind of correct that a majority revenue, I think, comes from domestic business. Translated into rupees, this is basically 2,900 crores in total revenue, of which 699 crores came from international and 2,274 came from domestic. But very important is to look at the EBITDA margins. You see, EBITDA, this percentage. Okay, I can't even press. Okay, so PAT, profit after tax, and PAT percentage. Let's look at them. Okay, here we can see in international services, see this 9%, 9.9. That is the profit after tax percentage for international. And then see domestic, 1.7%. So And let's see your total contribution. This is the PAT, okay, of 109 million in PAT overall, 109 million. 70 million came from international services despite contributing like one third of the revenue. So domestic contributed 38.6 million in revenue of the entire 109 crores in profits. So around 70% of profits came from international services despite contributing third of the revenue coming from domestic itself. As you can see, 346 million, even less than a third. Yeah, one fourth, less than one fourth of revenue coming from international. 70% of profits came from international. So the India business seems to be the revenue scaling business. And remember about the reselling software, reselling Microsoft software. Yeah, that is the revenue driving thing, but it's less profit margins because they're essentially reselling products. So, like reselling software is the big revenue driver, but the services they sell later, like helping businesses use these services better, implementing them better, uh, providing them data analytics services, modernization services, digital transformation services. These are the more, let's say, smaller revenue, but more profitable. And we can see, okay, we saw it. International services contributed like one fourth the revenue, less than one fourth, but 70% of profits. 70% of profits. I guess that should be it, right? There's nothing more to discuss for Sonata software. Um, what more can we see? Uh, okay, okay. Financial performance, financial performance, financial performance, international services. Let's see. So in quarter one fiscal year 2026, revenue in millions, year on year, in constant currency terms, meaning we are not including any foreign exchange gains and losses. Revenue declined by 2.4% year on year. And the book to bill ratio, now book is order book, which is the total amount of work they have. Very important metric. Book to bill was 1.28x. Okay. But international services revenue declined 2.8%, 2.4% year on year. You can see the EBITDA and the PAT, and we have the margin also. So EBITDA margin declined from 18.7%, no, yeah, 18.7% to 16.6%. And EBITDA overall declined from $15.5 million dollars to $13.5 million. Dollars. The profit after tax increased from 7.8 million to 8.3 million. Okay, okay. DSO, days sales outstanding. Believe DSO means how many days it takes for days sales outstanding. No, I don't know this metric. Hold up. But I believe higher this number, the worse. 59 days, 12 months back, 62 days now. Return on capital has declined from 18.8% to 14.7. This is return on capital employed for international services. Again, international services is the profit driver. If international services does not drive profit, then what else drives profit? You can see the top 10 customers contributed 56% of revenue. It's a lot of customer, like I believe, concentration. And USA, of course, 74% of this came from USA. And they only added around seven new customers in quarter one fiscal 2026. I guess that makes sense. Almost negligible revenue growth. So, like less number of customers added. And 14, like 12 months back, they added like 14 customers. Moving on, we have the domestic business. This did pretty well. Uh, okay, again, of course, no year on year growth. Okay, in millions. Is it in millions? In crores. Okay, 2,275 crores. This latest quarter, big growth, a big growth from 1,849 crores. Wow, that is how much is that? That's like 400 crores increase. And when compared as a percentage of 1849, I have a calculator. So 400 crores divided by 1849, more than 20%, more than 20% growth year on year. Very impressive. Domestic business is growing very fast. Oh my God. But EBITDA, EBITDA declined from 47 crores to 44 crores. Oh my God. That is sad. Headcount, okay. DSO, day sales outstanding. Okay, return on net worth declined from 51% to 32.5%. Return on capital employed declined from 47% to 33.6%. And I need to check out what DSO means. Hold up. Where is Google? DSO meaning days sales outstanding. Okay. A DSA, day sales outstanding, is a financial metrics which measures number of days it takes a company to collect payment after a sale. Oh, how many days it takes for a company to collect payment after a sale? Okay, yeah, yeah, makes sense. Okay, more higher the number of these DSO days, the worse it is for a company. And I think the last thing we can take is okay, so EBITDA decrease. So international services revenue did not grow, all it declined, but profit after tax still grew. But for domestic business, the main revenue driver, revenue rose 20%, but EBITDA declined and profit for tax probably declined. And that's why such low return on capital employed numbers. And these are details of finance costs and depreciation costs. Uh, okay, what can we see here? For this quarter, so depreciation costs rose due to new office facilities in Hyderabad. Fair enough. Other income and foreign exchange saw an uptick primarily driven by higher foreign exchange gains and return on investment. Okay, wow, return on investment. And interest on acquisition loan increased because of additional loan acquired by quarter for Quant SPA payment. I have no idea what that means. And last thing we can look at is cash flow. Cash flow of the company. Again, Skinner.com. It may not always have the most accurate numbers, but has pretty good numbers. So, 127 crores in cash flow from operations 2014, 100 and, okay, 290 crores 2018. We can see a lot of fluctuation. 450 crores in 2022, 268 crores here, 281 crores 2024, and 644 crores in 2025. Cash flow from operations. Here we can see the working capital changes which affect cash flow from operations. We see here if we pull up, yes. Okay, minus 7280, minus 242, plus 184 crores, minus 177, minus 209, and plus 103. So a lot of fluctuation in working capital changes. Okay, but that happens. You know, it's a business, of course. I don't know anything about running a business. So of course, fluctuation happens in business. Yeah. Overall, cash flow operations, it's not stagnant. It grows. Genuinely speaking, goes up, it goes down, it fluctuates, but the highs are way higher than the lows. And I think that's it. 644 crores in cash from operations, visible increase here too. Very fast revenue grower, majority revenue coming from India, and I guess reselling software for other companies, which is a lower margin business. International services contributes less than one fourth of revenue, but contributes 70% of profits. And I guess its aspirations are continuing to be a top growth firm. So that's it. Hope you like the video. Yeah.